Hey everyone, welcome to this week's episode of Investment Trends, where we discuss everything that's going on in the stock market and the economy. And this week, it's Masters Week. Not sure if you can see the logo or not. So I've got my golf shirt on today. Excited to watch some of the golf action this weekend. So this week started off with a solar eclipse. So on Monday, we had the solar eclipse. Very exciting event. Hopefully there were some of you that took some time to put the glasses on and check out the solar eclipse. So this week was a big week in market news, and most specifically on Wednesday, we saw the Consumer Price Index report come out, which is a very important inflation reading that the Federal Reserve watches, and that report came in hotter than expected. It came in at 3.5%, which is showing that there's still an ongoing battle with inflation that the Federal Reserve is trying to get under wraps. We saw the stock market go down pretty significantly on Wednesday. However, by the end of the trading day, it did make back some of those losses. Then on Thursday, we had the Producer Price Index report come out, and that was actually lower than expected at 2.1%. And we saw the market recover all of those losses that it had on Wednesday and also a little bit extra. So on Thursday, one of the stocks that benefited the most was Apple, as it had its best trading day of the year. So Apple recently announced that 1 in 7 new iPhones are now being manufactured in India. So it's showing less reliance on China, and this was received very well by investors, and that stock saw its best day of the year. So we close out the first quarter in the top two of the top sectors out of the 11 sectors were energy and financials. And this week we get a look into how the bank stocks are doing and a look at a lot of those financial stocks. So Friday morning, Citigroup, Wells Fargo, JP Morgan Chase announced their first quarter earnings reports, and all three banks reported higher than estimated earnings and revenue. So JP Morgan, who is the behemoth in the industry by assets, they're the largest bank, reported a revenue growth of 8%. They said that higher interest rates as well as larger loans played a factor in that. They also are giving some credit to the acquisition of First Republic Bank, which is showing their numbers now growing in revenue as well. Wells Fargo, similar note, their revenue was up. Same with Citigroup. Citigroup had pretty significant layoffs all throughout the year. They've been cutting many jobs, and they did see their revenue and profits increase as well. However, even on that good news, those three stocks have traded down on the day, and we see trading activity on Friday is actually trending lower on the day. So a couple of things to note so far with this week is, looking at the yields. So Treasury yields still remain pretty high. You can still get over 5% for a 3-month, 6-month, 9-month, or 12-month Treasury bill. So if you've got money that you want to sit in cash, you're a little bit worried about where the market might head, there are still a decent return and a decent yield on those Treasury bonds. So if there's any other stocks that come to mind or that you see, it's been a little topsy-turvy for the Magnificent Seven. NVIDIA has seen some wild swings. That's obviously been the predominant winner in the AI race so far. And also, the other stocks that are doing really well this year are Alphabet and Amazon. So Amazon hit a record high this week as well. So those are a couple stocks to keep an eye on. The other stocks, so we mentioned Apple earlier. Tesla is down on the year almost 30% year to date. So something to watch there if that stock can recover and rebound. So if there's anything else that you're watching, reading, seeing in the investment world, please leave a comment below.